Morning. All there. So good morning. So it's good to see there are the 26 people to this webinar on ESG and lessons learned on impact investing strategies. So I'm sitting here with Irene, and InFiNe is really delighted to host this webinar today with our three speakers. So welcome all of you, and also what I wanted to tell you before starting, if you've got any question, please, you can already write them in the chat. And what we are suggesting is that I'll introduce the speakers, and after my welcome remarks, there is Carl Richter who speak, and then I will ask questions to Edouard and Claudia. So in InFiNe, with the Inclusive Finance Network, gathering more than 39 members from the public, private, and civil society stakeholders. Most of you are members, so I'm not going to go into details about InFiNe. And so today we are going to listen to the lessons learned from two of our members, Impact and the Grameen Crédit Agricole Foundation, who attended these courses at the Frankfurt School of Finance. Let me introduce the speakers. So first, Carl Richter, who's professor at the Frankfurt School of Finance and the co-founder of Engage X, is the executive director of Engage X, which specializes in providing consultancy through leadership, advocacy, and policy work. So Carl works internationally across private, public, and social sectors. Is an experienced entrepreneur, leader, and executive, and lectures at the Frankfurt School of Finance and Management. Welcome, Carl, and we're looking forward to listening to you. He's been also invited by civil society organizations, academia, government, and media across Europe, Asia, and the US to speak on social impact investing. So after the presentation of Carl, we will have Claudia Dambax. Claudia, welcome. She's an associate director at Impact here in Luxembourg and the head of board advisory services. Claudia has 17 years of experience in the alternative investment, social responsible, ESG, and impact finance. Also financial services sector, asset management, administration, and board advisory of investment funds and trusts with the alternative investment field, such as microfinance, impact finance, but also private equity, venture capital, and real estate, as well as traditional asset management. So she's got much more to say, but I will let her explain later. And Edouard, so I forgot to say, she was certified expert in ESG and impact investing back in 2022. And Edouard Sers, welcome Edouard, is the head of the risk and impact at the Grameen Crédit Agricole Foundation based in Paris. And as part of his responsibilities, Edouard is a member of the foundation's executive committee. He supervises the risk team and coordinates the development of the ESG and impact standard at the foundation. As you may have seen on our website, Edouard attended the course it's an online course for 6 months, and he attended and was certified in September 2023. And Edouard also wrote very interesting articles that were posted on the LinkedIn. And so we are looking forward. And what I forgot to mention is that InFiNe is also offering scholarship to our members, and also Claudia didn't request it. Edouard was sponsored by InFiNe and as some of our members. So we're really happy now to listen to your experience. But first, if there is any question, I'll give the floor to Carl, who is going to present the understanding of the ESG and impact investing with a common conceptual framework. Thank you very much, Carl.
That's great, and thank you for the introduction, and great to meet everyone, and great to see Edouard and Claudia again. It's wonderful to almost have the roles reversed, where we can listen and learn from you, which is great. So I'm going to try and be really brief and just introduce some key aspects from the course that will hopefully give the conversation some context. So you should see the slide, and you should see it moving on now to the next. Yeah, there we go. I get the confirmation picture. So the first idea we introduced into the course in the context of ESG and impact investing is to point out that the landscape is really, really diverse with a lot of very, very different actors, with different mandates and different requirements around financial goals and non-financial goals. And so I can just start putting up some of these actors, and what we're really trying to show is that they, some of those actors have overlapping interests, and some of them sit on opposite sides of this matrix. And so it depends really who you're speaking to and who you are in terms of whether you find your conversations aligning, or sometimes you're talking about impact investing or ESG investing, and it seems like the language is the same, but people are coming from different places. Well, this helps us understand that and why that might be the case. And that then also means that different actors may either take a portfolio view where you're looking to achieve performance across a whole bunch of assets, and the whole portfolio as a whole needs to perform in a certain way, and alternatively it might be every single asset has to perform in accordance with a mandate, and you're measuring performance on that level, and sometimes in between. I'm really racing through in a very quick way just because I want to give Claudia and Edouard a lot of time to talk. And so we can see kind of this zone of the operating space of impact investing being very, very broad across all of these areas. Then at the heart of our course, we introduce a rubric for trying to pull all of this difference together, and we try and arrange the different broad approaches that we find in the market. So whether it's social return on investment or thematic investing or ESG or impact, and we've arranged them according to how operationally intense they are, or how less operationally intense they are. So there are a whole lot of strategies that we've observed. This gets discussed in great detail on the course. It's too much detail really for our conversation today, other than to say we are not trying to invent anything new. We're not trying to create a new framework. We're simply holding up a mirror to what we're observing in the industry, and codifying that into discrete strategies that can be deployed in any combination depending on what the mandate requirements are. And typically that originates from being really clear about what the types of goal is, or the types of goals are, in terms of particularly the non-financial goals, whether you're just managing your exposures, positive and negative, whether you're getting into looking at risk management of non-financial issues, whether you're starting to quantify the outputs, or whether you're going a little bit deeper and looking to understand how those outputs actually affect stakeholders and what their lived experiences are of those outputs, and those we would call outcomes. And so some of the data we can obtain from the asset itself, and I think this talks to the operational intensity. Sometimes, specifically when you're talking about stakeholder engagement, it really requires you to look outside of the asset and look at who are the people, or the ecology, if you're focused on environmental issues. What are the impacts there? And that's often outside the realm of the asset. And maybe just some high level emphasis points, which is we try and emphasize that there is no value judgment here in this rubric. So we're not trying to suggest that things on the right hand side are better than on the left. Rather, it's a different approach, and we'll get into the conversation around impact washing. But it's really about emphasizing: are you selecting the correct combination of strategies that corresponds with the types of goals that you're setting? So at that point, I'll just, I think, hand over. I'll stop sharing and really look forward to the conversation.
Thank you very much, Carl. And I think it's very interesting. And what I would like now is to open the discussion with Edouard and Claudia. with, of course, your intervention, Professor Karl. So my first question to Claudia and Edouard is, so why did you decide to go through this training? So if you could both explain to us the reason, and that would be very interesting.
Yeah, thanks, Anne, and welcome to all. I'm happy to be part of this webinar and to share experience and views. Maybe before I come to answer to your questions, Anne, because you just mentioned that indeed I did not benefit from this scholarship from InFiNe, but I'm happy as well. In the meanwhile, I have a team member and she was interested and she was just granted actually that scholarship, and she started the class last September. So it's always good as well for me to exchange already on more daily lives. How is it going? Anyways, coming back to your question, basically I'm in the impact space since more than 14 years. And indeed, you could ask, what is really useful here? For me, that was useful because back in my time when I studied, in fact, sustainability was really not very well known. And I studied management concept. Looking now from what we know and where the sector developed nowadays, honestly, it was really, really early days. And sometimes maybe thinking back, it's even that the professor made certain things up just to call it sustainability management. Anyways, so then, of course, 14 years ago, we did not even use that term impact investing, impact finance. It was more about microfinance, renewable energy efficiencies. And I was lucky at that time that I, by chance, was manager of certain blended finance funds that were launched at that time or even earlier in 2005. So that's where I could, rather jump into day-to-day work on impact finance funds. The desire, basically why I decided and why I looked up that class, was really to put some more theoretical and more profound context again to a day-to-day work I'm living every day.
So maybe, Edouard, if you could also explain to us the reason why you decided to follow this training in Frankfurt.
Yes, hello everybody. Very happy to be here at this webinar. On my side, I've been working in the microfinance industry for the past 18 years, starting in 2005, and at that time, I was working for a rating agency, and we were working a lot on the concepts of social performance management. We were doing social ratings. And I think that in the microfinance industry, we have been tackling with ESG and impact topics for the past 20 years. However, we have seen in the past 20 years also a huge boom in ESG and impact assets. So-called ESG and impact assets. And so, of course, many other know-how have been developing in these other industries. And for me, going through this training with Frankfurt School was a great opportunity to know better what is done elsewhere, because the training is full of examples from other industries. We are able to discuss with other students coming from other industries, other countries. And therefore, it gives a very good distance when compared to my own industry. Also, what I was told from former students is that this training was very structured. And as you could see, there are these 8 ESG and impact strategies. And I think this is very helpful to avoid impact washing or greenwashing, to have a structured approach. So these were my 2 expectations.
Yeah, so maybe now a second question to you. So what are the lessons that you learned from this experience, Claudia?
Yes, it's a little bit coming back to what Edouard said already. For me as well, I saw what Karl just in a nutshell presented. This very structured quality assurance approach. That was helpful. What I realized as well, speaking to colleagues or speaking into the network of impact finance stakeholders, I realized that many people connect rather impact finance. Karl mentioned that already as well a little bit, that Frankfurt School tries not to put a value in it, but to say, okay, impact is only achieved when I really follow my vision, my goals through through a theory of change. So I need to define a theory of change, and then I only can call it impact. Indeed, I mean, I learned as well. So the approach is presented. That's rather what Carl on the right-hand side, when he showed his slide, that already there further rather outcome related approaches that then really dedicate or already kind of call themselves impact approach. This was something what I realized speaking to peers, that indeed, I mean, as there's not the one concept out there, it's I mean, it's still like the impact finance space is developing. We are on a journey. We are every day as well learning for ourselves, going with our vision and missions in the right directions. But this is really something I learned. But I think it was very, I mean, another lessons learned is really to, through the structured approach, really ask yourself, ask your entity already from an internal perspective, as do we do the right strategy and approach to it? But then certainly as well taking this to clients and advising and actually assessing their impact approach or their approaches overall, and maybe definitely sort this out more. We spoke already just shortly about the keyword then greenwashing, and here indeed for me it's as well this lessons learned to really have an instrument at it to prove yourself how robust you are with your strategy setting, and how can you really link that actually to your own claims you're doing. How robust is it? And it's kind of doing the checklist on your own before somebody else does it, and then kind of says, you're doing greenwashing. Actually, you're not even, you know, you're not staying to your word what you're claiming to do. Then for me, I mean, the lessons learned indeed was as well, as Anne mentioned, I achieved this certificate in March 2022, but I think it's still the case. What was really interesting throughout diverse students to have really this exchange, to see as well thoughts of others, maybe not necessarily deeply in the impact space. I'm always a friend of let's spread the word, let's influence, let's really, you know, make the world better. So this was an interesting exchange as well, to have different kind of levels, just to see a little bit other views. As for me as well, a diversified team in any case always makes the difference, and makes us as well moving forward ahead. And as Edouard said as well, I mean, there are practical examples. Then there's this case study, and I'm looking a little bit to Carl, but I think it's still the case where students are put in groups and they really work on, and that was an interesting exercise. Yeah. With this, yeah, sorry.
Excellent. Thanks a lot, Claudia. Very interesting. And Edouard, did you learn? Yeah, have the same same feedback, the same lessons learned, or is that completely different for you?
Yes, I mean close, but a bit different, of course. I think one of the key messages that I liked a lot during this training is that ESG and impact investing is not an asset class, or should not be considered as a closed asset class. I mean, you can see the figures, you can see all kinds of figures on this so-called asset class. It's more an approach to investing. Like risk is an approach, return is an approach, impact or ESG is also an approach to investing. And what this training invites us to do is to say, okay, if you say that you have an approach to ESG and impacts, you should ask yourself, what are your non-financial goals, to define them very clearly. And as you see, what are your non-financial goals? There is no value judgment in this. And also, what is your flexibility with each of these non-financial goals, so that then you can, you know, compare with the flexibility that you have on your financial goals. I found this very useful because this approach is agnostic. And for me, as a risk manager of the Grameen Crédit Agricole Foundation, it's very important because I need to speak to different kind of actors, including to Crédit Agricole. And Crédit Agricole is a French bank. And if I talk to them about impacts, I don't think they will understand me, because they are a huge bank in France. They do have an impact on the economy. But if I tell them I'm an impact investor, you are not, we will not understand each other. But if we are speaking about non-financial goals, then we can speak. So that was one first point. And during the training, we had indeed to do these case studies, and I chose a case study about real estate funds with my other students. And to test a bit this training, I interviewed two former classmates 20 years ago. I was doing my studies with them. One became a fund manager of a real estate fund, and I think it's an Article 8 real estate fund. And the other one became CEO of an association working to put back people in decent homes. And so the idea of my interviews with them was really to understand what were the ESG and impact approaches that they use. The first one, manager of a real estate fund, is in fact mostly using an approach, and maybe I can share the slides again. It will be easier. If I may, Carl.
Yeah, please do.
Yeah, so this real estate fund, its objective is to set up buildings, office buildings that are very environmentally friendly, and that can be, and which construction can be in line with net zero targets. And so the main strategy that they have is to manage environmental risks, and how they do it is that they make sure that during the construction of the building, they would get at the end an eco certification, showing that they are complying with many norms and of the industry, of the real estate industry. And they are investing billions in that strategy. And I do think that it's very beneficial to our society to have such actors. But as you can see, their main strategy is to manage environmental risks. The other friend I have interviewed is working for an association, bringing back people into decent homes. And so what the investors are asking to the association are not a strategy to manage risks, but a strategy, a capacity to explain what are the outputs created by this association. And the outputs are the number of beneficiaries, where they are located, how much rent they pay, and that's the main outputs that they need to be able to invest in this association. And so, of course, you see that there are very, very different strategies. And I was able to speak to them about their goals because I had no value judgment about what they do. Then, of course, when we compare what they tell me to the communication of their organizations, there can be some gaps, and we can maybe discuss that a bit later. So that was a very good lesson for me to see how to discuss about non-financial goals with a very diverse range of actors. And of course, another lesson learned is how this could apply to the Grameen Crédit Agricole Foundation, but I think we can discuss that a bit later.
Thanks a lot. Thanks a lot, Edouard. And I was reading again the article you wrote on especially on these new challenges for social enterprise with the real estate yesterday, and it's very interesting. So for all the people connected, they can also read this article on the InFiNe website. So moving from the theory to the practical. So more, on the operational level, maybe I think it would be really nice to see how do you use that into practice on a daily basis, Claudia. And it would be really nice if you could share with us some concrete examples and to go a bit further into the
thanks,
subject.
Before doing this, and as Edouard is still sharing the slides, maybe I can just have shortly a word on impact, although maybe most of you know who is Impact. As we're as well, a well-known player in Luxembourg impact space and even internationally and growing, but as well an InFiNe member. So Impact has been founded 16 years ago. So our track record is already quite some time ago. And as it's always, I mean, before firms are created, there's even already additional interaction in the impact space at that time. We have successfully launched 33 funds. And I mean, in the traditional world, somebody would say, oh, I'm doing this in a week time. But indeed, I mean, dedicated impact finance funds are really complex vehicles, and already at the launch, when you design them properly and set up, they're well done. And as I mentioned before, we are as well involved in these blended finance structures. So the actors Carl mentioned before, like the development finance institutions, impact investors, this is really our space. And specifically for governments and DFIs, we are involved in these blended finance fund structures. We are a growing firm, so in the meanwhile, we have 50 plus impact finance experts with us. So that's always good to see. And what I said already before, we are happy to be really out in the market and putting our DNA into other innovative projects. Overall, we have total impact investments designed and advised for over 8 billion. And this basically all comes together in 170 plus projects we're doing. Sometimes they're a little bit more complex, and sometimes it's maybe short-term projects. And in the meanwhile, after 16 years, we have really a range of services. So not only strategy and structuring of innovative impact vehicles, but we are growing more and more the impact management. I mean, and of course, right now there's even SFDR and taxonomy related matters in it. We have launched about 5 years ago an impact dedicated AIFM, one of the first of its kind, because a little bit what was already said before, in the sustainable or impact finance space, we speak as well different languages. There's a different service attitude expected. So this is really why we launched that AIFM services, and in the meanwhile as well, our AIFM clients are growing, and we're really happy about that. Overall, we are as well doing fund management services. I'm heading the board advisory services, as mentioned as well by Anne before. We as well offer independent directorship services, because that's really something where more and more we see that there's a need that people or funds, other boards really want to complement their skills, and really putting as well further experts on board levels. We have as well investment services, and more recently, as well as we always listen to the market and see where we can be innovative, we have launched an impact bond securitization platform. If you can go to the next slide, Edouard. Thanks, exactly. And our vision is really, as I said already before, we're really putting social and environmental initiatives that are sustainable at our forefront. That is our DNA. So we would not even do any other traditional projects. We're really dedicated to sustainable and impact initiatives only. And this is really to foster it. So this is really our mission, what we see to do better into the world. We are as well the first B Corp certified company in 2015 here in Luxembourg. And here it's as well a further development. You may know as well IMS in the market, who is now the coordinator on the B Corps in Luxembourg. With that, indeed, I can come back. What have I used in practice? It's a little bit what I said already before. Interesting is already to have these different views. What is really an approach? I think in the impact space, many people still give this value in it. And indeed, interesting as well is to see that a combination, what Carl mentioned as well before, the combination of the strategies makes really then more sense, and is basically, or what makes sense after you having defined your strategy. In day-to-day work, for example, advising one NGO on an impact framework. It was very interesting for me as well, because indeed, I mean, we are always aiming at the highest. And when we have looked already from this framework definition, of course, you need to start somewhere. You put the framework, and then actually, you know, you're still setting up the additional steps, because just speaking about strategy and approaches is the first step. And then obviously you have a full chain, what you still need to adopt afterwards in order to justify your claim and still to make it really robust throughout the full line, let's say. And interesting for me in this advice of this NGO was sometimes they looked a little bit like with big eyes at me, because they're saying, okay, but if we define this on strategy level, how are we actually able to really perform that? Because of course, I mean, here a key point is the vision is somewhere. Here, I think it's great to aim high. You need to be careful, obviously, then how do you define your claims, that this is not a mismatch. And this is exactly what we outlined already before, a potential to greenwashing or actually not doing what you're claiming to do. And the key word here is that obviously you need to be able then as well to monitor and to measure whatever you put in your claims. And this is something where in the market, what I mentioned already before, there's always development needed. It's a journey. It's even a journey for the best players in the market, because we're not yet even there at the end. We're developing all of this further. Impact measurement and monitoring is definitely something this is really now getting a huge push. And with this, I mean, you have heard, or you have as well put in place, and that's as well what I discussed with that NGO, in order to measure your performance, you set up KPIs. And already specifically now into the financial sector from this SFDR regulation, you need as well not to see, because you intend to do good positive impact. But indeed, it happens as well that there's negative impacts, so that you're not closing your eye. And here from the SFDR, most probably some of you have touch points with that, with these principal adverse impacts, that indeed you need to be as well aware of them. You need to manage them, and that's really in this impact measurement and monitoring framework, actually to really with your vision then putting this in place. So when this question came from that NGO to tell me, Claudia, but we will never be able to do this. I think what is really important is to really aim high, and then really to do the structured approach already from the strategy level, really putting in place what am I able to measure, to monitor, and as well not to be shy to do mistakes. Of course, bigger ones are to be avoided, but that's why I think it's good as well to discuss with peers, to discuss internally, in order to have then good ideas, to have to see how do I manage this then when it comes across. And it's for me as well really a step-by-step approach, as obviously it's complex already. I mean, here again, the slide is still in front of us. Indeed, already to think of what are my exposures, what are actually my risk, what are the outputs, and what outcomes do I want to achieve. And again, not to be forgotten, it's not only about positive, it's as well about the negative ones. This is really a step-by-step approach, and really to outline how do you want to come there. I think that's already the structural approach is of key. Yeah, I think that's what I wanted to share for the time being.
That's very, very rich, and I'm sure there will be lots of questions afterwards. So now maybe the same question for Edouard, and it would be really nice to have your
yes. Okay. So
view.
we strive to leave 10 minutes for the questions at the end. So just 5 minutes. So what Claudia said is really sounds familiar to me, because as you say, it's a step-by-step approach. And we can say it's really an iterative approach from strategy to operations and back and forth, maybe to adjust the strategy once we realize that the operations cannot follow properly. So as I think maybe I mentioned that at the foundation, we defined our impact model back in 2019. And when we said defining an impact model, it meant really having from the mission of the foundation to the outcomes of the clients, a path explaining how we want to achieve that. And so it's very nice because it explains to all actors what we aim to do, but it's not an approach that really allows easily then to conclude what should be the operational measures that we should take. So just to give you a little bit of background on the foundation, because before I go into the details, very quickly, we were founded 15 years ago by Professor Yunus and by the Crédit Agricole Group. Our main activity is to finance and provide technical assistance to microfinance institutions and social enterprises through debt and NTA. Our aim is to help them become stronger organizations. Our portfolio is of 80 million euros in 30 countries with about 80 partners. And as you can see here, we are a very hybrid organization because we are coming from Grameen Trust and from Crédit Agricole. So that's why having an agnostic approach to ESG and impact is really useful. Okay, so the foundation had defined its impact model, but I wanted after this course to really use this framework to challenge ourselves whether we were able to, first to define what are the most important strategies for us and then able to implement them. I would like just to give two examples. So the first example I would like to take is on outcomes. We have been doing commissioning impact surveys over the past 3 to 4 years, and the objective was really to understand what is the impact of our partners on their financial beneficiaries on the field. For example, last year we commissioned 8 impact surveys with 60 decibel, and this was really useful because it helped us understand what kind of impact our partners have on the final beneficiaries. Very concretely, for example, these studies confirm that there is a first-time access for many borrowers. The study confirms that, in fact, 1/5 have a significant impact on their business, 1/3 on their quality of life, but also 1/10 have an issue with repaying their debt. And so this is very important also in terms of risk management. So these impact surveys helped us understand what is potentially our impact, so to inform our governance and also to adjust our claims. But okay, so we went through this process, and what we realized with practice, but also with this training, what I realized is that it was too operationally intensive for us. This strategy of assessing targeted effects, so the one we use with these impact surveys, is very operationally intense, because even as a debt investor, if you want to do it well, you need to engage your partner on the results. You need to co-build the study with your partner. This requires a lot of follow-up, a lot of meetings, and so it cannot be done on a full portfolio. So we did it on a big sample last year, and the lesson that we are taking from this experience is that now we will do it with less partners, but with bigger client samples to be able to engage them more on the lessons they draw from these impact surveys, and to really help them adapt their products and services to their final clients. So that was one example. And the other example, if I still have a bit of time, I'm just checking. 2 minutes, yes, is about our strategy of exposure. So you can see here the strategy seek beneficial exposure. For the foundation, a beneficial exposure is to be very active in Africa. So we have half of our partners in Africa and 30% of our portfolio in Africa. This is very important to us. And Of course, today we see more and more climate risks, more and more political risks in this region and in other regions, but this region is really a focus for us. And so we need to ask ourselves if we want this exposure to Africa, what return we want on this region, what risk we are ready to accept, and what impact we want. And so the impact that we want on Africa is measured in terms of outputs, so which kinds of people are benefiting from the services, and also in terms of ENS risk management. So we are providing, for example, technical assistance to our MFI partners to better identify climate risks or to better identify AML risk, for example. So you can see here that we combine a beneficial exposure strategy with a managed internal risk strategy with an explain causal logic strategy. But to do it well, we need to define on risk, return, and impact. What is our flexibility on each of these objectives? Do we want to reach that on a portfolio level or on an individual asset level? And so we are now redefining all this thanks to this very useful framework. That's it.
Thanks a lot. Just right on time. Thank you so much, Claudia, Edouard, and Carl. And I think now it's really time to leave the floor for, we've got more than 35 people connected, and I'm very happy to see it not only from Luxembourg, but from all over the places here. So I'm sure there will be some question. And one question we had, I think from Senegal, is if we would share the slides. So of course, we'll share the slides with you if it's okay for Gramming, Pedagogical, and Carl, and also for Impact, then we can share the slides and that will be done. Thanks a lot. So, Carl, do you want to react on that before leaving the floor for questions and so?
I think most of my questions have already been answered. So I think I would first of all thank both Edouard and Claudia. I think what was highlighted was something we're trying to achieve with the course, which is to particularly with an executive education course, there's so much knowledge sharing that happens between and within the student group. I mean, it's just clear from the discussion today, both Claudia and Edouard have a tremendous amount of existing experience and knowledge of this topic, which they're bringing into the course. And so therefore, it's particularly also valuable to just learn how you're applying it. I think the one question that I would have, and it's a little bit, I suppose, it has a bias a little bit because we're trying to figure out, well, how does the course get received out in the outside world? I just like, you did speak about it, both Claudia and Edouard, about how your conversations are happening and how you've been able to structure those conversations with colleagues, either internal colleagues or external colleagues. And I'm interested just whether the way the framework gets presented actually helps you in those conversations, or if we still need to evolve that a little bit in terms of the storytelling, because we've always been very conscious that this is just our current reflection on what we observe in the market, and it's an evolving topic, as you've said, and it may very well change, and it may very well need to change as we're responding to how the market is maturing. So I'm just really interested in how you're finding the reactions from people who have not seen the detail of the course, and you're trying to then communicate some of those more nuanced lessons. And be critical, please be critical if you find, oh, there's difficulty here or there, because I think everyone on the call will benefit from that.
Yeah. I think it's a very good question, and maybe I give some time to reflect for Edouard. I'm just quickly reacting on it. Yeah. It's a little bit what I said before, and you re-mentioned it now, this evolvement of sector, you know, I mean, in the impact space, or I mean, in this higher approaches, how we say, we don't want to put value in it. We are still not totally commonly aligned, right? And I think that's why what I feel it's really these different different judgments, let's say. I mean, it's for me more an instrument than really to keep the debate ongoing, right? Again, for me, it's a wonderful instrument actually to structure this, you know, what I mentioned already before. are we going there to align on this? You know, I don't know. I mean, how can this further be developed? I mean, I think for the time being, indeed, again, it's an instrument where everybody can really reflect. You know, do I do right? Is my strategy well defined? And I think this gives a wonderful instrument for this. What I mentioned before, you know, I think the most disagreement, I mean, I would not even say disagreement, right? Again, as there are no perfect rules or no, you know, A, B, C, and that's it, and that's what you need to do, then you can call yourself impact investor, etc. I mean, what we always learn as well, it's very difficult to very commonly do something, because already investments, it's really like a case by case. It's everything you need to turn on an individual basis. It's very hard to really generalize it, right? Although we try to do it a little bit in order to be more efficient as well. But I think this most debatable thing, you know, what is now really an impact strategy, what I mentioned already before, where I have peers clearly saying, Claudia, without a theory of change, we're not impact. You know, then we cannot call us doing really impact. And this is exactly throughout this course, you know, where you really start rather this causal logic, where you still have this three, or the separation of the three, the causal logic, the targeted effects and all effects, and then with the theory of change and the highest highest approach. Again, I put a value in, I try really not to do. I think this is the more debate. I mean, for the time being, I would not really see, you know, or could not give you feedback, you know, what is out there. It's really evolving and discussion all over. What I find, nevertheless, this one specific thing, manage supplier risk, which is one of the ESG approaches. This is very interesting because, I mean, certainly in agriculture climate funds, we have this a lot, where already putting in the full supply chain is, in fact, really a challenge itself, right? How do I do this? Am I able to impose something on my full supply chain? I mean, I'm thinking of discussions we have if you invest in cattle farms. You know, then already tracking all suppliers is a challenge. Then once you track them all, you know, and then really going down the line. But again, I think the approaches, how they're presented here, etc. It's exactly, you know, for me, you touch really all the topics needed. In fact, with this, I have not really seen something missing as such. But again, I mean, it gives a framework, and then you go into the details.
Thank you, Claudia. Since we've got 10 minutes left, if Edouard doesn't mind, I would love to give the floor to the participants online. So if anyone has got a question, please raise your hand. And yeah, I think 1 hour is a bit short, so we've got 10 minutes. I'm sure there is some questions. So I can see already we've got, so please introduce yourself. And I see Asia was, okay, was one of our members having a question, and then Vladimir. So maybe we take the different question in a row. So first Asia, and then Vladimir, and then Pedro. Please go ahead with your questions and we write down.
Hi, so thank you for your presentations. My name is Astier. I work at the Microinsurance Network in Luxembourg. You know, we're kind of an easy audience, I would say, for you, Carl, especially because I think we're all convinced here in the room. And my question is, I'm very curious on, do you target also other companies, and do they actually go to the course? And then can you know, there is so much pressure now on sustainability and all of this, but nobody really either understands it or is convinced. They just know they have to do it. I think that's why there is a lot of greenwashing. There is intentional greenwashing. I'm sure there is also non-intentional greenwashing and impact washing and all of these things. But yeah, if you don't change the corporate culture, then you will never really manage to do it. And I think Edouard mentioned this, that you know, in the foundation, of course, I'm sure everyone is convinced. But then when you go to the other side of the building, where are the investment managers are. They don't really get it. So do you in the course and how do you tackle this? What's your strategy of changing the corporate culture or pushing people to change it within the organizations? I think that's kind of my curiosity.
It's a great question because it's very difficult to have a conversation with people sometimes who don't want to have the conversation. So, however, I think there are a few elements in how we've designed the course so that we can begin to have that conversation when they are ready, particularly in the context of that broader culture. So the first piece, which was really presented by Claudia and Edouard very, very eloquently, but I'll just repeat it, is the idea of presenting the framework as an agnostic framework, presenting it as, so it's not a value judgment about saying, well, this is what you have to do to be good, or this is what you have to do to be a better investor. It's simply, if we take a step back to the fundamental building blocks of finance, such as modern portfolio theory, where we talk about optimizing risk and returns across a portfolio, across those two aspects. Now what we're saying is, well, there's also a third aspect, which is the non-financial aspect. Now, in the same way that you don't actually have to actively manage risk, you can just ignore risk. It doesn't make the risk go away. You're just not managing it. Similarly, you cannot manage non-financial aspects, and you just need to be mindful of what that means. And so, again, it was touched on, which is, well, if you are going to start making claims, then you need to be able to substantiate those claims. And so, therefore, we talk about this as a quality assurance framework, particularly with that aspect in mind. Again, if you're not making claims about non-financial issues, then in a way, there isn't yet that conversation to be had. But as soon as there's any kind of conversation within the corporate culture environment about sustainability being important, or this or that, or we've achieved this, or we've achieved that, or we intend to achieve this, or we intend to achieve that, then we can start holding people's feet to the fire a little bit and say, well, in terms of your predictive confidence, how confident are you that that's going to happen? And that's why we, in the same way that a quality assurance framework in any industry will allow you to have a more consistent approach to results from a quality perspective, and therefore be able to predict that with more confidence, and also be able to consistently repeat your performance, as opposed to just looking back and saying, oh, we had a great experience in the last series of investments. But if you weren't actively managing that, it could be that you were just very lucky. And how do we move from being lucky to actually being able to do this in a way that is a little bit more systematized when we're starting to make those claims? And I think what we're seeing is the industry is moving in that direction. We're seeing the regulatory drive with the European Union and Commission in terms of now effectively calling out greenwashing and saying you're no longer allowed to call things green or sustainable unless you can actually substantiate that. So we feel that really sort of plays into what we've been trying to achieve with the course quite well.
Thanks, Carl. Sorry, we're running out of time. So thanks so much for your answer, and I hope it's clear for Asia. I'll let the floor now to Vladimir. I don't know how to pronounce your name, but Vladimir, please go ahead.
You pronounce it exactly as it should be. Thank you very much. I'm working currently as a country manager at Symbiotics, which is an impact investing platform in Switzerland. But I have been in microfinance or in the inclusive finance industry over the last 10 years. I'm also Edouard's former colleague, so this also is to say hi to Edouard. I can only agree with Claudia and Edouard that the quality assurance framework and strategies and the intensities was really an insightful part of the Frankfurt School of Financial Management ESG training that I took part of as well. But let me ask our three panelists, Carl, Edouard, Claudia, how do you see the future of ESG investing in the context of currently growing climate skeptics, ESG skeptic audience, high politicization of the ESG topics in the US, in the EU. We see now a stagnation of ESG funds or even some outflows in the US. So I'd like to see how do you see the future?
Pausing just to see if Claudia or Edouard wants to react. You've effectively almost set up a topic for another hour-long discussion.
Yes,
but,
I prefer not to intervene on this.
Sorry?
I let Carl answer.
Yeah. I think there's an element of self-reflection that we need to have. One of the reasons why it's been possible, I think personally, to have politicized ESG and impact, and why maybe some of those arguments have made more progress than we might have thought they should, is perhaps because so there's been some structural weaknesses in how the whole broader industry of ESG has established and has, and hasn't yet quite matured as far as it should have, in order to be able to withstand that degree of critique and argument. And so I think hopefully with our contribution here, with the way the course is structured and the QA framework, we can provide people with the tools and the arguments to strengthen that debate and take it forward in a more convincing way.
Claudia, do you want to add something on it?
Yeah, maybe I can just add very shortly, as Carl rightly said. I think now we could go on for not only an hour, but most probably even longer and debate that. For me, it's indeed like how do I see this? It's maybe indeed to the fact that this is a little bit what I said earlier as well. I mean, I think as well on microfinance, we had a lot of criticism, like with high interest rate, suicides, etc. Should we step back, what we're doing for this? No, we should not. I mean, indeed, I think we should not close eyes from critics. And, I think we should, again, in a structured way, continue to what we do, and specifically in the sector, as you just mentioned, most probably here in this audience, we are now speaking alike to alike. But as well, I don't know if you saw Edouard's and my reaction in the chat. In the class itself, there as well really people coming from the traditional sector, which I think indeed for me was very interesting as well, because and now I'm coming what is expected, or what am I wishing, right? I'm wishing for a more sustainable world. And these kind of classes then specifically bringing diverse people together, and people maybe who just started their journey and need to learn. This for me is the wish I would like to do, to influence and to jointly bring forces together, and then in order to indeed mature the sector more. We are all in a journey, and that's really something I can just repeat and repeat. Although, of course, you may say ESG now, is it still new? No, I mean now it's we're already more in mainstream, and maybe at the next level to adjust it then accordingly, as in order to avoid criticism. But I think for me it's as well a little bit like development aid. I mean, we are in this process, and if needed, we need to adjust it. And for me, and again, it's seeing the sector, I mean, it's a hard wish. Indeed, I would like really that we're coping with that, and that we even grow stronger out of it. It's now a very high level answer, maybe to your very specific question, etc. And I don't even want to open up a US point of view. I lived there 2 years with anxiety, and I was happy to come back to Europe. I mean, US is great, but specifically in the sustainability matters and consume, etc. I mean, we can debate that in another lesson even, but exactly.
Thanks a lot, Claudia. Since maybe you take the last question from Pedro. So Pedro, if you could introduce yourself and go ahead with your question. Thanks a lot.
Hello, I'm Pedro Villampulo, a doctoral student in financial law at the other chair in financial law. So I can spot Laura Foske here from the other. So if I heard it well at the beginning of the webinar, I heard something like ESG investing and impact investing is different. So if I heard it well, what would be the difference? Because if I heard the terms, for me, was like they meant the same.
Yeah, so it's a great question, because I think it talks to the way the industry is currently having the conversation. And often we find that people are in a room talking about ESG investing, and then they will say, well, we do it this way, and that's different to impact investing because those people are in a different room and they do it a different way. And what we've tried to do is deconstruct that argument and say, well, maybe it's because the mandates and the kind of organizations that you are operating in and you find yourself in mean that you have to operate in a certain way. So generally, institutional investors, when you might be, or think about somebody creating an exchange traded fund or managing pension fund money, you may not be able to. And I think Edouard and both Claudia and Edouard mentioned, it's very operationally intense to go and reach stakeholders and do stakeholder surveys. You simply can't do it. So you say, well, those people have to be in a different room. They're different. They're not us. And then impact investors will often say, well, we really care about the contributions to society and the environment. And this ESG thing is just very light touch. And they don't really get into the real substantive point of view. They're in another room over there. They're not really doing it properly. And what we've tried to do is say, actually, that kind of us and them approach doesn't really help. There are some fundamental differences, but it's not quite as clear-cut as those simplistic arguments suggest. We can actually arrange things along a spectrum. And by really emphasizing the agnostic approach and removing the value judgment from those conversations, we can say, well, here are the independent strategies that would be relevant in different contexts, and it's about getting the right combination of strategies together based on the substance of what you're claiming, the substance of how you're describing your goals, as opposed to the badge or the label that you're wearing.
Thank you.
Yeah.
Yes, Edouard, go
Great
ahead.
question. Thank you.
Yeah, if I may, and I know we are a bit above schedule, but so I agree. As you can see in the strategies are different, but a single actor can use a mix of strategies. And when I gave you the example about our exposure to Africa, having an exposure to Africa, we can say it's ESG. Managing specific risks of financial inclusion in Africa, like over-indebtedness, is manage internal risks, ESG. But if we say that we want to do that, for example, with women, and we want to promote the outreach to women, and we want to know in the end if they are happy with the services and if they think that their service changed their life, it is impact. So it's often a mix of strategies. You can be an actor using more ESG strategies, but a little bit of impact, and the other way around also. But the idea, of course, is that claims are aligned with what you do. And as Claudia said, it's a step-by-step approach. You cannot just do in 6 months a review of all what you do, and then at the end you will have the paper with all the right claims. I think it's a longer process, but just starting it is useful, because by starting it, you will ask good questions to the governance.
Thank you very much. So I think if there's no more questions, the time is running out. So I really would like to thank you all, and also a special thank you to Irene Pancheri, the project manager of InFiNe, who organized it. And I think it's a bit short. It's our first webinar of the year, and I think it's very useful, and I can see there are many people interested. So if there is more question, we can also follow up, and we will post the presentation on our website and also on LinkedIn. And normally in March, we'll have another call for proposals for scholarships for InFiNe members. And I already know someone from, I think, Impact is going to the Frankfurt School of Finance this year. So thank you very much. And yeah, so any final word from all of you, the speakers?
Thank you to Claudia and Edouard for a great contribution, and thank you, Anne, for moderating. I think it was a very enjoyable conversation, and also to the questions. Thank you.
Thanks a lot.
I would just join the thank you. And I mean, for me, as I always said already, the word spreads the word, and all of a sudden we all speak about ESG and impact investing. That would be nice.
And also sorry, I forgot to say, we recorded as well the webinar. So we will also share it with you.
Thank you very much.
Thanks a lot. So wishing you a very nice day.
Thank you. Same to you.
Have a good day.
Thank you.
Bye-bye.
Bye. Bye-bye.
Bye-bye.